Property fund manager and investor First Property reported a 10% drop in full-year profits before tax, partly thanks to a vacancy created at one of its offices in Poland last October. Despite this, the group saw total assets under management rise by nearly 12% and increased the dividend to 1.22 pence per share. Ben Habib is the CEO of First Property. Ben, good to have you in the studio.
Thank you.
Tell us a bit more about why we've seen this 10% drop in profits.
Well, it's a slight misrepresentation. The profit last year included the minority interest of a rather large fund called FProp Opportunities plc. So the £9.23 million profit that we made last year included profit that actually didn't belong to us. Under IFRS, you don't split that off. And the profit this year, after having deconsolidated that fund, was naturally going to be lower anyway. We were always going to head down after that minority interest was taken out. So actually the reduction in profit doesn't represent a reduction in trade. We did have a vacancy at a property called CH8 in Warsaw, quite a large vacancy, but we did have also other one-off profits that would have made up for that, but for the fact that we had to deconsolidate FOP, which took this minority interest out. So it's a bit complex, but that's the explanation.
So do you think that complexity is why we're seeing the share price a bit lower today?
Yeah, I think so. And NAV per share dropped slightly as well. So that could be one of the reasons that it dropped, not from last year, it was up from last year, but it dropped from the interim stage. We had some adjustments in property values at the year end. So I think that could be the reason.
So tell us a bit more about your two new funds.
So the first of those two new funds is a company called FProp Phoenix Limited that owns a business park in Krakow, 50,000 square meters of office space, which we originally bought from a receiver. First Property Group bought entirely for about £1 million. And we, having bought it, restructured the debt, which was in default. And when we'd secured the financing of the property, we then introduced third-party capital into the structure, so it became a fund structure within the group. And now we are going through the process of repositioning those 4 buildings, which were half vacant, putting CapEx into them. We've just built a sports field, we've upgraded the receptions, we've introduced a new free bus service, we've upgraded the railway station, we've bought a couple of plots. You know, we're doing all the things required to be done in order to ensure that tenants want to come and occupy the space.
So these funds, is that what's going to be driving profitability in this current year?
Yeah, so profitability this year will be driven by the lettings that we did in the vacant space that was created at CH8, plus what we do at with these funds.
All right, so let's talk about your assets under management. They rose by 12.8% to £706 million. Were you happy with that number? What type of growth are you looking for this year?
Yeah, well, we're an opportunistic fund manager, so we don't target growth rates per se. It's obviously nice to have large assets under management because we make money out of large assets under management. But we're more interested in ensuring that we buy the right kinds of properties and that our funds make money. So we're opportunistic buyers of property. We only buy when we think it's right to buy.
So where do you think some of those opportunities are?
Well, we were buying offices, and we would still buy offices if we could find offices to buy. But as we
in the UK?
In the UK. In the UK. That's in the UK. And offices has become a particularly interesting sector because the government introduced something called permitted development rights a few years ago, which allowed the conversion of offices to residential. And that took a lot of office stock out of circulation, which meant that rents started to rise on the remaining stock. So it became quite a compelling proposition to buy offices. And we've done very well in that fund. We've bought, you know, quite a few properties with it. But in the last few months, really I'd say post-January, with all this unknown about what's happening with Brexit. It's not Brexit itself, it's the uncertainty of whether we're leaving, not leaving, and on what terms are we leaving. That uncertainty has effectively put a lid on the market and people aren't transacting at the moment. We would buy if we could, but there's not much for sale.
So would you say that Brexit is weighing on your opportunities in the UK right now?
The uncertainty of Brexit is weighing on it. Brexit itself isn't. If the government could get on and deliver Brexit, then I think everything would be fine again. But this uncertainty, not knowing what's going on, is bad for the market.
So last time we spoke in January, you said that you thought a second referendum was going to be the most likely outcome. Is that still your view?
I think that something has to give in Parliament. Parliament clearly is unable to reach a consensus on what should be done. They reject just about every single proposal rather than alighting on one with which they wish to run. So something has to give in Parliament, and it's either a general election, and for the Tories that's turkeys voting for Christmas, or it's a referendum. So I think if I was a betting man, even though it may look unlikely, I suspect they will eventually end up going down that road, as horrible such a route might be.
So you've recently been elected as an MEP for the Brexit Party. Congratulations.
Yeah, thank you.
Two very big jobs you've got now, CEO
Yeah.
of First Property and MEP. How are you going to divide your time? How are you going to be able to be on top of both of those roles at the same time?
Yeah, well, as you'll appreciate, I want to be an MEP for as short a period as possible. And
That's not guaranteed, though.
That's not guaranteed. But I've got two aims while I'm there. The principal aim is to give effect to Brexit and to do whatever I can in the Parliament to achieve that. And the second aim is, to the extent that I'm able and it's necessary, to stand up for British national interest, and to do that unashamedly without looking at the greater benefit of the European Union. So if needs be, I'll make myself a bit of a nuisance in the Parliament in order to promote the United Kingdom. But I've got a voracious appetite for work. I actually don't regard it as work. I don't regard being CEO of First Property Group as work, nor do I regard being an MEP as work. I think I'm having fun in both capacities, and I want to go on having fun. So I'm going to work for as much as it takes to get both jobs done.
All right, let's get back to First Property for a minute. I know Poland is another very, very big market of yours. Tell us about the market conditions there, and are there lots of opportunities that you see in that region? Yeah,
so Poland is now quite a developed market. The economy is very strong. Last year, the GDP growth rate of Poland was 5%. Investment yields on properties have been dropping as values have risen. So prime offices in Warsaw now are trading at around 4.5%. At the peak of the last cycle, back in 2007, they were trading at around 6.5%. So a material pickup in value, which may signal bad things to come. But at the moment, the market is buoyant. And the lettings market is very healthy as well. There's plenty of tenant demand, businesses are growing. So the whole thing is set fair at the moment. The problem for us with all that buoyancy is, again, finding the opportunities. But it is a much more interesting market for us than the United Kingdom is. Would you ever look beyond Poland and the UK and Romania you're looking at as well, right? Yeah, so we've got some stuff in Romania. We were growing Romania. We're always open to new jurisdictions. Okay. We're a small team. We like to manage our properties directly. We don't like to subcontract the management. So to the extent that we're able to deploy our own resources to manage property, we would go to another jurisdiction. But if our resources were to come under pressure, then we'd stick, to what we're doing. And finally, the dividend. You've implemented a slight hike in the dividend, around a 3% rise. Yeah. Tell us why that was a priority for you, given the fact that your profits did come down by 10%. Yeah, well, on an underlying basis, actually, our profitability wasn't down. It's this funny accounting treatment of the minority interest. We've got plenty of cash in the balance sheet. I think the future's bright. Brexit will eventually happen, and we will do stuff in the UK. And it seems reasonable to up the dividend. All right, thank you so much for your time. Thank you. That was Ben Habib, CEO of First Property. I'm Victoria Scholar, and thank you for watching IGTV.